Hello and welcome to this January 14th, 2011 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're actually taking a look at an index, the Semiconductor Index. So on stock charts, this is the $SOX, that's the ticker symbol you can use. The SOX is a price-weighted index composed of 18 United States semiconductor companies. So it gives us a pretty broad range of U.S. semiconductor performance and expectations. And taking a look at the chart, you can see that back in August, after the bottom, it looked like we were breaking down beneath several points of support around 325 to 330. It was very bearish back then. Actually, we even took out the early February lows, which we had closed at about 312, 313. So really it looked horrible, but that ended up being a false breakdown, and we have seen a huge move to the upside. The semis are now up about 40% off of those late August lows, and you can see the move has been straight up, and just about every single 20-day test has been a buy on the semis, and that is normally a bullish indication. Anytime you've got a stock that's uptrending and continues to bounce off its 20-day moving average, it generally shows you that you've got a lot of momentum, a lot of positive momentum in that stock or in that index. What's interesting, though, is the last two highs that we put in. As we came off the bottom and kept moving higher, you can see that the MACD just kind of followed suit and kept pushing up. But in early December, when we moved to a new high, you can see that there was actually a slight negative divergence then. And now as we continue to push up to new highs, you can see that the MACD is much lower. Now we don't know, and by the way, this is through Wednesday's close, but we don't know exactly how far the semiconductors are going to run on this move. We could continue going up for another 5-10 days, and the MACD could go straight up, and then the negative divergence would be eliminated. So it might be a little premature to be jumping in on the short side on the semis because there's a negative divergence, because you don't know where this bullish momentum is going to carry the stock and where the MACD is going to be when this run comes to an end. But what you can do is be on the lookout for signs of a top. A reversing candle right at the top Thursday after the bell. Intel reports. With that report, if we get a gap up in this group and then there's a big failure and you see a bearish engulfing candle or a dark cloud cover candle and you've got these negative divergences in play, then potentially we could have some issues in the semiconductors. And if that's the case, we could have some issues in the overall market in the near term. The other thing, notice that after Wednesday's close, the RSI on the semiconductors was 83. That is an incredibly overbought level. We don't generally see that on an index like this very often. So we've got very overbought conditions already with an RSI at 83 and stochastics at 98. So stochastics are confirming as well. When you combine all of this, the RSI 83, stochastics 98, two consecutive highs now, both times with negative divergences in play. What this tells us, it doesn't guarantee us anything. The market may continue to go up. Semiconductors may continue to move higher. There's nothing that stops the market in that sense. But what we do have to be careful of is that now there are a lot more risks in the market. And I think that's what you have to take away from this. If you decide you want to get into a semiconductor stock or play the semiconductor index through an ETF, you have to understand the risks that you're taking getting in at this kind of a level. And that's where we try to draw your attention to. We want to make sure you understand the risks involved. I think it's be a prudent time to take some profits in semiconductors, and I certainly would not be taking new positions based on what we're looking at here. Good luck in your trading, and of course, happy trading.